Hello profit takers, it's Victoria here and we are back today with another video, and today we are going to talk about the day 2 trend trades. All right, so these are the signals that you're going to get from the profit takers dashboard that show one high of week or one low of week. Okay. And in these examples, we're just going to focus on these particular signals only, and I'm going to show you the different things that can happen because, yeah, day 2 is often one of my favorite trade setups. However, you want to be prepared if it doesn't play out, right? And it's not necessarily that the signal failed, right? Because the market makers can move price and take out the previous day high and low, and now the trend has changed. But because you have the profit takers alert dashboard, you're going to know in real time that, hey, this signal that came out yesterday isn't playing out today because price did something else, right? And with that, you know, we have to take in consideration when news happens, we have to be aware that the news can actually start the trends over, can complete the cycles, can reset it. So you want to be aware of that. All right, so let's go ahead and get to the charts. And I'm going to cover, there's about, let's see, we had 1, 2, 3. So there's 3 signals that I'm going to cover today. Is it 3 or 4? Probably 4 of them. So we'll go ahead to it because Friday we had some changes in the trend, and I wanted to identify these so you guys would know. This one right now is oil. Oil and the dollar Swiss were not necessarily day 2 trend trades. Okay, these were what you would consider a day 3 continuation or a 3-day trade, or what else could we call it? A reset, right? So before we get to that, I'm going to go ahead and start off with the Aussie CAD, because this one did show a signal for a short trade, right? So we initially had, you know, a high of day here. We had 3 hits to the high, breakout fell. So the signal was the next day, which was day 2, we're expecting to go short. Okay. So I had marked it previous day. This was what I did the day before, just from the high. Now you could do a couple of things. You could mark it from the high to the low of the day to get 50% retracement. Okay, it's another thing. Or if you go all the way, if you just do the 2 highs and lows right here. Let's see here from the day. Okay, those are 2 ways you can look at it, because kind of subjective, but you know, you can look at it that way because price could definitely go up, do a stop hunt around there, and then start to fall down there. So that's one of the 2 ways you can measure it. So for the day of, you can come to the market, and then you can also do your retracement from the previous day high and the previous day low as well, to get an idea of where that retracement is. Okay. So the day before, I was thinking this thing was going to retrace, and those were the things that I did, and I had marked the area, and that's why I put that right there on the previous day. So when I got to the charts, you know, I already had noticed that price was already making lower lows and lower highs. So you can already see that it was trending long. So my idea for this thing to give us a retracement and go short was no longer a thing. Okay, it was no longer a thing. So this is why I'm saying, when you come to the market and you see prices doing something else, then you might want to step back again and look, okay, price is not going short. It's not doing, it's doing lower lows, lower highs. So what you could do now, what I typically do, since day 2 was making lower lows and lower high, the trend was changing. If you still want to look to trade this particular pair, you could. So if you're going into London, then you would typically measure the most recent high, and then from the low of day, which was actually right at yesterday's low. And this would have been where your retracement for the entry would have been. Let me drop down to M15 so you can see the boxes. On M15, I have the box for blue for London, and then yellow for New York, and then the purple boxes are the market opens. I normally don't show those on here because it gets a little busy, but I figured for this training, well, I'll just go ahead and drop them on there, right? So if you were coming in to trade London, then you'll go to the recent high, and then I'll go to the low, yesterday's low, and then the retracement area would be right here. Okay. All right. So if you are going to be trading going into New York, then of course the next thing you want to do is do the retracement from the high and the low. Where did I put my recent high and yesterday's low? Okay. That's what I did on this one. Okay. So that was a recent high, and this was the yesterday's low. So that's where I would have put it. And then the retracement was, it didn't really touch it, but let me move this up a little bit and go to the low of London. I think that would work out better for us. Let me drop this here. Hold on. So I can get a measurement. It's even better. So that high right there and this low, and this is 15 minutes. So you have time, right? You're not doing this and you're trying to do it in a hurry. You have literally time. That's a 15-minute candle for you to go and do this real quick, right? And that's how you would do, that's how I would do the retracement, right? From that recent high to the low to get into this trade to go long for New York. Now this is like, right, this isn't like, this is probably 8 o'clock in the morning. Cause you know, actually this is 7. Let me see what time this is, guys. Let's see. Cause right here, that is 9 o'clock for me. Okay. 8:30. That is 8:30. And we had news at 8:30. You see what I'm talking about, guys? How this news can really just do a thing or two for a price. Okay, that's the news candle. Everybody should know that by now. But at 8:30 we had news, and that was a trade pretty much right there. Okay, so that was the Aussie CAD that we originally had the peak formation high day 2 trend trade for Friday, and it changed to a day 0 trade instead. Okay. The next one is the EuroCAD, which is showing day 0. And this one, same thing I did yesterday. All right, I had it marked from the previous day high. On the actual signal day, I marked the high and the low, the daily high and low there. And then that's where I got this retracement area for the 50%. I was thinking, okay, if that's what's going to happen on Friday, then boom, we should have an opportunity to short it, right? Because that's usually what it's supposed to do. All right, so when I get to the market, guess what I see? I see a whole W, all right? We have the first leg, we have the apex. I think that's what they call this. I don't know, I'm just making it up if not. And then we have the second leg, and then we have our break of structure. Okay. So this would have been the break-in structure down here. I would have looked at that as a break-in structure, and then up here I would have looked at that as a break of structure. So again, when you see a W, 2 hits to the low, it's this short trade is over. Like, you have to change your mind, right? So now we were like, okay, let's get into this market. How do we get in here, right? So same thing I would do, right? So again, dead giveaway when you see this W pattern. You want to go to the recent high if you're trading London. Just take it to the yesterday's low, and then here's your 50% retracement to enter this trade. Okay, and then now you want to go into, if you're trading New York, recent high, again, it would be right here. And the low, I would use this area because 2 things, right? We have this black line is Asia's low of the week, and it that is pretty much close to the low, and that was like the gap time low. So the retracement to get into this was right there. As you can see, the 50% was right there. So right when the market opened, it pinned to the low of the session, and then boom, it went up. This is a low hanging fruit trade. You know, usually whenever you see one push, pull back, two push, pull back, three push, this is probably this is going to be the last push of the session, and you may not get that much. But you know, who's complaining about, you know, 30, 40 pips? It's not bad. Okay, so that's how you would do that. Okay, so I'm gonna erase some of this stuff. Gets a little busy. Hope you're getting some value. If you are, hit the like button, subscribe, say hello. Okay. All right, the next one with the day 0 was the pound CAD as well. And again, with this one, I came in here and I did the measurement. I was like, okay, if that was going to happen, then let's just prepare for this around this area. And then of course, when I get to the market, you know, I'm seeing that we have prices at the low of the day. It hit the low like 4 times, right? So that's another dead giveaway. So again, if you're trading London, you want to get the high, the most recent high, and then in this scenario, it's right at the quarter level. You could probably even use the quarter level there. As you can see, that was at the 75, or you can just use yesterday's low, and it's really tight. You can't really see it, but it's right there. You can see the 50% mark is just right there, guys. And that was the entry for that. And then for the retracement, if you're trading in the for New York, the way I did this one, because the retracement, I mean, if I had tried and gone all the way down here, it's too late, right? So I just tightened this up a little bit, and I went to the low of the gap, or actually the market open, which was still in the gap, right? I went to that most recent low, and then this high right here to get the 50% retracement, where I'm looking to get in at the market, which is right here. Okay, and that's how we get in at the low of the day. Well, not the low of the day, the low of the session for New York to take this trade. Okay, 60 some odd pips, not bad, guys. This is good, right? And this gets you in a little earlier than having to wait until price hits the high of day, because we know once it crosses that, that's when really the dash is going to update, because now this is no longer trending short. This is for sure going up, right? And someone had mentioned something. Well, I go in and I look and I see one thing, and then the dash changes, and I'm like, yeah, it's going to change if the original thesis or theory was wrong. If price ends up taking it out, then it's letting you know this is no longer a short trade. You know, we're in a new trend right now. So that's how it's very helpful to you. And if you're doing proper risk management, then you would have been out of that trade already, or if you didn't properly wait until the right time, right? Because I used to get caught up, and even sometimes I slip up every now and then and get into the trades too soon before the market is officially open for me. And then, you know, that's whenever I get caught, right? So it's just a habit that you have to unlearn and just learn to be more patient. Okay. All right. So those were the 3 trades that I looked at that were showing a day 2 trend trade to go short. And instead, the market told us otherwise. We did have news, like I mentioned, and I also showed you how to get into those trades if you do decide that you want to go ahead and take that day 0 trade, which is often a beautiful trade anyway, but it's not in the direction that you originally intended. But since you were so diligent in watching price, you were able to execute accordingly as price changed and moved in real time. That's the whole deal here, right? Real time. All right, so now I'm going to look at the actual day 2 trades that actually played out. as expected, right? So we're going to look at AZ, is it ANZD, Aussie, New Zealand. All right, this was a day 2 perfection trade. This is the type of setup and trade that you would love. This is what we love all the time. Okay, so same thing. Now, look how this one was actually giving us the 50% in the middle there of the gap, which would have been great for New York for the low-hanging fruit. Right? You could do it that way. You can come to the day of at the low and high and take a measurement and see where you're getting in. The ultimate entry for these type of trades, it makes it so easy when you can see this white line is open price. That's an absolute beautiful entry. And yesterday's high. When you see those two things there, it's golden. Right? So what I'm going to do now, if you're trading for London, we're going to go to the most recent high, and then we're going to use the yesterday's price. And that's where I got that 50% right there to enter this market. Okay. I'm not sure if too many people trade this anyway, so especially because it's a pair that would typically play out nicely early in the earlier sessions, right? Not sure if anyone in New York is looking to take this low-hanging fruit trade, right? But if you are, most recent high and low, again, this is right before the market opens, and your entry is also right here. Definitely very tradable. Okay, about 20 pips. Okay, the next one was CAD Swissy. CAD CHF. This was another one. This was a low, one peak formation low, day 2 trends. So let's go here and see what we got. Uh-oh. I let go too soon. You can do this if this doesn't work out nicely for you, my other option here is to go all the way from the low to the high. All right, if you want to make some adjustments there. Sometimes it's not going to come all the way back down here. So I like to have a couple of options on doing that. Sometimes the daily high and low for that day works. For the actual signal day works, but then the actual day of works out too. As you can see, the high and low on the actual day of the trade. You see how it nicely got in there at the 50%. All right. So I often look at both of them, and then that's what I do. But you definitely want to make sure you have some kind of idea of how you're going to get in this market. The next one was CAD JPY. Played out nicely. Oh, look at this one's already done for y'all. So we had the high and the low for the previous day. We had the 50% mark. And this although it was, and this is a day 2 that it did play out, but it also didn't really play out that well. Okay. The market started to range and go sideways. And this to me tells me that on Tuesday, or actually Monday, okay, Monday is when we should expect to see the day 2 trend play out on day 3. Okay, that's what I'm expecting. So we'll wait and see, because this one did give you an opportunity. But again, the market's only going to give us what we, it's not going to give us everything like we would want it to on day 2. Sometimes day 2 ends up to be trash like this. Okay, so you've seen an example where day 2 was a actual trend reversal into a new trend, like going from short to long. And then you saw the example on how day 2 played out beautifully as a trend trade. And here is how you're seeing how day 2 is also just going flat. So you just want to hold your horses on this, because I do like CJ. And I know that once this thing starts to push up, it's relentless. right? Something about this pair, or is it just yen pairs? They just love to go long and long and long and then go on forever, right? Okay, so we have another one with the Euro Swissy did the same thing. Okay, you had the opportunity to take this trade long as well, but it was again short-lived. Okay, short-lived, and look at that. From the previous day, if I did that one, I can see the 50% was way down there. So coming to the market and it hadn't already hit that level. So I'm making adjustments to the fib, right? So now I'm looking at the most recent low, which we can use that. You see the day open, and then you can see the high, all right? And then guess what? The 50% is right there at yesterday's high, and that was an entry. Was it a great trade? Not really. I mean, it is Swissy, not really a great trade. But once you notice it starts to pull back and starts chopping you up, you want to go ahead and just get out of the trade. It's not doing anything. And just by looking at these, the way the candles were displaying, it was just a hot mess. And again, it is Swissy. Swissy's not always that great. But when it is good, when it trends, it trends. And that goes for every single pair. So here is the second example of how day 2 can just go flat. And what we want to do now is just wait for day 3 for our trend trade. Okay. We have one more, guys. And then we'll hop on to the day 0 trades that were not day 2s. Okay. And that is Euro GBP. All right. Beautiful setup. You cannot ask the markets for anything more than just this right here for a day 2, right? Beautiful, 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 beautiful. All right. So we're going to take our measurement. And you can see how nice that was, giving us an opportunity to enter this market after the retest of the order block there. You see the 50%. Can't ask for anything more. You don't really need to do a measurement on the second entry here, right? But you can if you want to. Can just go to this most recent high depending on when you're coming into the market, and yesterday's low to get into this market, right? But here is the other area. The other 2 areas is the day price right here, and then of course yesterday's low, and that's the low hanging fruit trade for the New Yorkers, right? Not my favorite low hanging fruit. I hate those trades. You know, I like the clean drops. So if I can get in the market, if I get to the charts early enough to get the clean drop, then I'm so excited. The low hanging fruit drops to me are just like, ugh, they seem to take forever. I don't know. It's not even like it's a whole lot, right? All right. So now it's like 20 pips, right? So now we're going to look at the dollar Swissy, which was a 0. And here's what I'm talking about, guys. So of course this one on Wednesday was a breakout fail. So we're counting that as day 1 because it got to, the high, the yesterday's high, the blue tracer, and it failed. Day 2, I love this EKG pattern, right? And we saw the EKG pattern on the other 2 pairs that we just talked about. And, those are day 2 fails pretty much, if you ask me. But they're still setting you up for the continuation trade on day 3. So that's why day 3 on Friday for this particular pair, for the dollar Swissy, played out beautifully because this was the inside day EKG pattern, the day 2 trade that didn't play out. So the market's held, and now it played out on day 3. So then you will also see day 0s just like this. Okay. Beautiful, beautiful entry. Cannot ask for anything more. Let's see. Oh, right there. Okay. Let's see about New York. Most recent high. Let's go to yesterday's low. You can see this one here. So before any of that stuff happened, all you have is the most recent high in that gap session, and then you have yesterday's low printed out already. But none of this has happened, right? So your entry is right here at the 50% mark. And with this particular pair, it's not bad. Okay. It's not bad. Getting 40 pips out of this before the market starts. And if you hold on to it throughout the session, 60 some odd pips, it's not bad. It's pretty good. Okay, the last one we have for day 0 is oil. Same thing here. Day 1, breakout fell. Day 2, we had like a EKG pattern here. Nothing, you know, no short trade happened that was really worth taking. We had a reversal trade that was choppy, you know. That's your day 2 EKG pattern. So this is just the market holding, waiting for the Friday. And again, news happened on Friday anyway. So this was a day where we were expecting this thing to actually trend. Okay. And then you can see also the this particular area. This is Asia's low of the week price, and it was supporting or resisting, right? It was providing resistance for this particular trade for us. Okay. So this one, I am going to use most recent high, which is, it's not much, y'all. Coming into New York, because nothing really much happened in London. But if you're trading London and you're trading this pair and you're just looking at this, all you're doing for real in London trying to trade this pair is waiting for price to break through yesterday's high. But remember, this move right here is your first mouse. It's going to pull back, so you can use that area too. Okay, it's always going to pull back. And then here you have your entry for London. Well, it's not really London. London is already giving you a low of day reversal trade, but it went all the way to the high. So this the retracement from London's high and low put us back in short right here again at yesterday's high. And that's the trade that you want. Okay. And then New York had the retracement, and then we get in here for an additional trade or our first trade if we're not available for this particular trade, right? So that's how you do it, guys. I hope you really enjoyed this session. I enjoyed prepping this information for you. I will drop everything with my notes on here in the comments section or the description section. If you're in locals, it will be in the description section of locals, so that you can refer back to it. Okay. And then you can do this back testing on your own, because that's really what trading is all about, right? Don't take a word that I say, you go and look at it yourself. Okay. All right, guys, I'm all done for now. Thank you for joining me. And if you do not have this amazing tool, the information was going to also be in description. You can currently right now get, I think it's 20% off. 20% off. Grab the tool. It will help you to discern the trades that you're going to take and how to execute, especially with this day 2 trend trade. And you got all the examples on how to actually get into these markets, what to look for if the trade is not working out based on what you looked at the night before. All right. So this will save you a ton of time, a ton of headache. No, these are less stress, trades, setups, and entries into the market. And that's what we want. Trading is hard as it is, but we're here to make it just a little bit easier with the Profit Takers Alert Dash. So I hope you enjoyed this session, and we will see you in the next one. Ciao for now.